traders, Gary Wagner here just after 10 o'clock in Honolulu, 3 o'clock in New York on Monday, the 11th day of May, 2015, and this is the daily report for gold and silver. We have most of our markets trading lower today, including crude oil, the precious metals, and the equities markets. Let's first look at gold, currently off about $6 on the day, $11.83. We've seen a low of 78 even and a high of 90.9 or 11.91 on the high. Forex or spot currently trading at 83.98, 79.10 on the low, 91.79 on the high. And finally to silver on the day, that is trading lower also, off about 19 cents or 1.15% lower. Low today, 20.1620, and the high, 55. So traders, about the only thing that is trading higher on the day is the U.S. dollar. Here we're looking at our daily dollar chart. You can see it's back up over 95, 95.03 on the day. When we look at the Kitco Gold Index in terms of the net change, in other words, how we're seeing an effect on gold today, what you can see is that you've got dollar strength contributing to about $3 of the sell-off and normal trading contributing to about 90 cents of the sell-off. So it is both a dollar-based and seller's market currently in the precious metals today. So traders, on a technical base, it does appear as though we might see some further weakness or some weakness coming into the oil market. Of course, oil has been up ever since it's hit this low at roughly, about 41 on the low side right in here. From there, the market truly took off, trading from about 40 up over $60 per barrel, 61 and change, I believe, was the high somewhere right in here. But we are starting to see signs of weakness. If you look at the MACD, those have crossed. Momentum is moving down, but we haven't gotten that cross yet. Traders, I would say that we could see some real weakness come into crude oil over the next week to a week and a half. Traders, which takes us to our current forecast or take on gold. As you know, I have been bearish on this market. But what we have seen, rather than any bearish action, is really market flatness or trading within this narrow range. You can see that right here on our daily chart. Day after day, we've fallen out of the range on a couple of occasions. Looking at these lows at 82, we're trading at 83 right now. Of course, we've had these 72 lows that have come into the market. We get the proper pointer right up in here. But other than that, the market has been staying flat. However, when we do take a look at this market closer, and we'll go ahead and kind of blow this up, what we are seeing, though, is a series of not so much lower lows, but if we look at the, I'll call it the base for the highs that we had right in here, they were around 1210. As this market came down and made new lows here, of course, the next base level has been at around 1200. We saw that a little bit. This, again, is still a daily chart, but we saw that last week. Now it appears as though our base high might go to about 1190, that being the high of today's market. So what we have seen, even though we are trading virtually sideways in the market, we are seeing these series of base points or lower highs in the market. They're not dramatic because the market is range bound, so we're not seeing a dramatic new low or a dramatic new high. We did get this lower low here, and we've gotten series of lower highs. All in all, when we look at the market, they're really the only thing to say is that the pressure is to the downside. So we've gone ahead and pulled up a daily chart. This daily chart's in Japanese average format. When we do that, you'll notice the price change is different because it's fixing the midpoint as a price on this particular chart. But you can really see the sideways activity that we've seen in terms of our current Elliott wave count. My belief is that we are in some sort of a fifth wave down, although really all we've seen is sideways movement. But I do believe in terms of an intermediate and short-term count, we are on our on the fifth wave. When we take a real close-up look at our MACD, again, we talked about the fact on Friday that we had this real oscillation. In other words, we saw this break, but it came back up, touched right into the top of the shorter-term line, but now has moved down below it. So the MACD is signaling a sell, as well as the stochastics, but as you can see, there's no real strong movement without getting a lot of these false positives here, such as you get right in here or you get right here. So it's a very, very tricky market to trade. What it's really telling us is that this market has been absolutely sideways, and we can see that as we look at the candlesticks themselves. So traders, as far as silver goes, my sense is that it will trade in unison with the other precious metals. The other precious metals being under pressure, I still believe that 1600 is our basic support level. 1550 would be a place that I would look to see if we found any support. But up until then, I am going to remain sidelined. The reason that we've remained sidelined is we haven't really gotten a lot of movement one way or the other. It's also the primary reason that I am going to begin our new service starting next month, which is going to look at other markets and other opportunities, because when the markets are flat like this, we have to have a viable alternative or place to put our money. And we'll talk about that more this week. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye.